the key is, from my standpoint, to not push anything on anybody. And the way that I do that is I provide information, and then I always see what comes back. I've been in sales for a long time. If you don't hear back from somebody, one, you didn't pique their interest enough. Two, it wasn't the right fit. Or three, maybe you just didn't follow up enough times. But if you followed up 5 to 7 times, I think it takes 6 to 8 touches to get somebody back talking with you. If you've done that and you haven't heard anything, let it go. It's not the right fit.
Welcome to the Apartment Investing Journey, where we explore every facet of multifamily investing and development with top investors, brokers, and service providers who share their strategies, successes, and secrets to help you on your apartment investing journey.
Hey guys, welcome to the Apartment Investing Journey. My name is David Robinson. I'm excited about our guest today. Logan Freeman joins us. He's a guy that I've watched and have learned a lot from, and I'm excited to have him on today and dive into his story. A little bit about Logan. Logan is a real estate investor, developer, and an agent who has found his niche in the industry acting as an investment property specialist and actually representing buyers instead of sellers in the transaction process. Logan has also completed multiple joint venture projects, equity partnerships, and also works as a developer. Completing over 120 transactions in less than a year, Logan has found a process and relies on his most valuable priorities to guide his profit-producing activities. He's also a husband and a father to a brand new baby girl. He's located in Kansas City, Missouri, and can be found at livefreeinvestments.com. Just a quick note, we had a little bit of a glitch with the audio recording, so we're going to be picking up about a minute into Logan's introduction to his background and how he got into the real estate business. But the show is awesome, so hope you enjoy it, and here we go.
Some of our friends did, so we started working. I was 14 years old when I started working at a catering business. I started sweeping the floors and doing the dishes and frying chicken. I mean, you name it, I did it. And I would do that during the week or the weekends, and I would throw hay on the back of a trailer. For all you coastal guys out there, hay is what animals eat, and it's in a field, and it's just really tall grass, and us Midwesterners, we bale it up, and we throw it on the back.
Hey, we're familiar with hay out here in Utah, let me tell you.
So I did that, and I actually found a love for cooking, and I realized that it was mostly about what food brought people together. If you think about a big gathering, there's always food at the center. So I actually went to college for hotel and restaurant management. I thought I was going to be this hospitality mogul, and I was super excited about it. And then I started working in the industry a little bit, during college and then during the summers. And I said, this is not what I want to do. I don't want to run a restaurant and do this and that. So I went to school in Warrensburg, Missouri, which is just east of Kansas City. I played football there, and I had the opportunity to get picked up as an undrafted free agent with my arch rival, the Raiders. And so I'm obviously a Kansas City Chiefs fan. And my agent called me. He said, I got you a job, and you're going out to Oakland. And I was like, really, man? You couldn't get me any other team. But no, I think it was for a reason that I went out to Oakland, and ultimately it was not the right fit for me. I was cut. I beat out a couple of the players that were drafted, which was super exciting for me, but I lost my passion. It was a job, and it was not fun. And physically, I realized that I was where I needed to be at to be able to play at that level, but mentally, I was not ready for that. So I was cut from the Raiders, and I decided at that point to go ahead and not play football anymore. So I went to Las Vegas, and just with a buddy's family, not like a crazy Vegas trip, but and we were hanging out, and the 49ers had called, and that was about 4 weeks later where their final cuts. If you watch Hard Knocks, it was, each week you have those cuts, and it was right at that last cut where the 49ers center had went down, and they called me and said, hey, our center went down. We almost picked you up. We want you to come out to camp. And they said, are you in shape? Well, I was 335 pounds when I was at Oakland, and I probably had lost 40 pounds at that point. So I was 280 pounds or 290 pounds in 4 weeks. And I said, yeah, I'm in great shape, because I was running and trying to lose all that weight. And ultimately they said, well, what do you weigh? And I said, well, about 285. And well, did you kind of decide to do something else? And I did. And that was a turning point in my life. It was a great turning point for me. So I went back finished my MBA, got my master's degree in not hospitality, just in business. And I had this question the whole time I was in my MBA. It's like, okay, there's all of these theoretical ideas going around about marketing and management. And believe it or not, IRR is something they taught me in management school, but not with a calculator, with a pen and paper. Try to do IRR and NPV on a piece of paper is not a whole lot of fun. And I said,
yeah,
guys,
that doesn't sound fun.
There's calculators for this. There's models for this. Come on. But I did enjoy my MBA. And whenever I got cut, this is when another turning point was in my life. Is I was looking to lose a lot of weight. I was 335 pounds. The weight had fallen off to a point, but it was time for me to kind of get to where I needed to be in life. And so I had no business experience. So I decided to take a job. And if you listen to previous podcasts that I've done, I made 250 cold calls a day, trying to just make some money at a full-time job. I drove an hour both ways, so 2 hours in the car, and I implemented what Zig Ziglar called the school of automobiles, or whatever he called that. And I started listening to Zig Ziglar, Jim Rohn, Tony Robbins, Lewis Howes's podcast. If anybody's checked out Lewis Howes, he was one of the first ones back there with John Lee Dumas with Entrepreneur on Fire a long time ago. And I started reading all these books. And so I was working full-time job. I'd get up at 3:30. I'd work out. I'd drive to Sweet Springs, Missouri. I would go to school, or I'd go to work from 8 to 5. I would drive the hour back, go to school from 6 to 9. And I did that for 6 months. And at the end of that 6 months, there was another turning point in my life. And I knew I wasn't going to be at that job too long. And I had got myself a new job with Jimmy John's. I was the youngest franchise consultant they ever hired. So I had 25 stores in Arkansas, Kansas City, and Iowa that I oversaw. 24 years old, just young buck, just out there doing it. But that December was whenever I graduated. That January, I lost my father to drugs and alcohol. There was another turning point where I dove back into my Catholic faith. I dove back into personal and professional development. I really started to figure out, okay, Logan, you're no longer an athlete. You are now just a regular guy out there. You need to figure out what you're going to be. And I came across that book. It's right over here, that purple book, Rich Dad, Poor Dad. And that's what turned me on to real estate investing. And I started buying properties while I was traveling the country in Kansas City. And I would buy them with FHA, 2% down, move into them, put a tenant in there, basically a roommate. And I would GC these things up and put a little jingle in my pocket, sell them, and keep doing that. And that was my first kind of go around into real estate.
Well, I appreciate you taking the time to walk us through it. I mean, you've got a pretty cool story. And, it's interesting. I've had a handful of collegiate athletes on. And anytime I get a chance to talk with the athletes, they're cut from the same cloth, and just go-getters, willing to get after it, put in the work that's necessary to make things happen. So you're right in line with those same guys, and I appreciate that. So what I'd like to do is maybe push the conversation forward a little bit and talk to us about, I feel like you have a fairly unique business model in the way that you work with clients. And I'd like maybe people to understand how you work with them. And I've personally watched what you're doing and have modeled some things after the way that you're running your business. So if you don't mind, I'm interested in how you got to the place you're at today in the way that you run your business, and maybe walk us through that. I think that'd be helpful.
Yeah, absolutely. So, I cut my teeth in real estate. There was another turning point in my life. I was fired from a director of sales position here, 6-figure job, and was comfortable, and I was fired. And I decided at that point that I was no longer going to work for anybody else. So I had been thinking about real estate full time. And so I got my license, and my buddy was running a boutique firm here in Kansas City. And so I joined up with him, but at the same time, I started a consulting company. What I was doing was I $50 million fund as their head of acquisitions, buying smaller multifamily deals and single family homes. We would buy them, renovate them, lease them out. And then we were about number 6 on CoreVest's big portfolio refinance deal. And we did about 225 properties on their refinance. So what I saw through that process was the 2 sponsors. I saw these 2 guys raise a bunch of money, put it into a fund, go purchase a property, add value to it, lease it out, refinance the whole thing, get their investors' capital back out, and still cash flow. And I said, man, that is interesting. Now, what I was able to do was get a lot of reps on transactions, right? That's anywhere from 50-unit apartment complexes all the way down to literally single-family homes.
Do you mind me asking, how did you make that connection with those 2 partners?
I did not. It was the broker that I was working with. He still has his company here in Kansas City. And guess what? He found them on BiggerPockets.
Interesting.
Yep.
Okay, cool.
It's still a great resource that I utilize on a weekly basis right now.
Okay. You connected with your friend that owns a brokerage. He had this relationship that he had built, and you were able to get involved in those transactions and the acquisitions.
Absolutely.
Okay.
And not only that, I represented those two guys, but I found a lot of value in getting onto BiggerPockets and talking to people in LinkedIn, out-of-state investors, just starting to get those reps going. And I built my own investor list to over 75 people as well while I was doing that. And I did probably 40 transactions for those individuals as well during the same time. And that's why you see 120 in 12 months. We were moving.
That's awesome.
I want your listeners to know that I reviewed in person over 450 properties. I don't tell people this because they don't usually believe me, but I did those 125 transactions in 9 months, not in 12 months. So in 9 months, I reviewed those. We made offers on about 75% of those. And it took us that many, probably 350 offers to buy about 120, which is still a really good hit rate. But it's because we were able to buy with cash, close fast, and I had a reputation in the marketplace.
And I may have missed this, but did you say that those acquisitions were in your local market, or were they in markets?
All in Kansas City, Missouri.
Really? Interesting.
Yeah. And I found creative ways to find deals too. I used Craigslist. I would cold call property managers. Hey, who's selling? I would talk to other agents. Hey, if you've got a listing coming, send it to me and let me see what I can do before you get it live. And I started to get that funnel. It's a system, right? It's a funnel. If you can figure out how to fill it from the top, all you have to do is put in processes in place throughout the funnel to be able to get out to your outcome. So I did that with those guys for about 9 to 10 months, and then I decided that I saw how much work it was to do those smaller properties, and I said there's got to be an easier way. So I started reading books. I've got them all right behind me, but I started reading books on multifamily syndication and listening to podcasts, and so I started flying around the country, meeting with people. I hired Michael Blanc as a coach and went through his whole program. That was super helpful for me from writing standpoint. And then I said, okay, well, I'm going to become a multifamily syndicator and I might broker some of these deals as well. But what I didn't know and why I got into commercial real estate was to try to level up on the barrier of entry. Well, I was under the impression that there was less people going after those assets. When I got into it, turned out there was actually just as much, if not more, people going after those assets. So that was a little bit of a kind of a step back, but I didn't let that deter me. And I went ahead and found some properties for myself to purchase. So I bought some commercial property. And then I also syndicated, I don't know if anybody else has been on your podcast that syndicated bed and breakfast hotels in Kansas City. I did 2 of them in about 6 months. And it's an interesting business model. Our COO at our company is from Ritz-Carlton, so we have the management in-house. I would not tell anybody to go do it, but the yield on these things are great whenever you can figure them out. So we have a hybrid Airbnb short-term rental model that we implement into these properties. But the way that I found where I'm at now and my partners at Clemens Real Estate was I pitched them that deal. Track record, I had the balance sheet that, maybe I had the cash, but I didn't have the balance sheet that could support that type of loan, nor did I want a loan like that on my books alone. So, and I needed an operational partner. So I said, hey guys, here's a really cool property. I know you're aware of it because you operate in this space. If I can handle X, Y, and Z, which was capital raising, operate a little bit of the operational piece and getting people excited about the deal, would you maybe come in and help me get the loan and do the management of it? And they said, oh, absolutely. If you can do that, sure. And so I did. And through our due diligence process, we found another one and I did it again. And so that's how I got into this equity raising and doing the syndication piece of it. Since then, I've strictly moved into doing large retail centers and multifamily and self-storage. And then I broker as well here for Clemens Real Estate, but I only work with buyers. I have a whole process that I take people through, very specific and very picky for who I work with because my time is extremely valuable. So I need to make sure I'm working with know what they're getting into. And I'm way more than just an agent or a broker in the city. I'm able to take maybe first-time investors that have a 1031 exchange, or they might have just a lot of capital that, they're software engineers out in Silicon Valley and they need to move money into somewhere that's yielding. And I take them on as basically what I'll call a coaching client. I set them through and then I open my own team, my lenders, my attorneys, my insurance, my management, you name it, my contractors. and then I just open that team and I plug them into that system. And so you can see why I can't work with that many people at once, but my transaction level, or from a standpoint of the size, is they're all above $2.5 million, and we're doing 3 to 4 right now a month. So with that being said, I offer that free of charge. And if they don't close on a property, that's shame on me, because I should have put them in a better asset, or I should have foreseen something. So it's a win-win from both sides, because they're getting a lot of coaching and mentorship for free. They're getting my whole team. And then if I don't close on bad properties, and I don't close on stuff just to do transactions, AKA why I'm not a listing agent. So I don't put stuff out there just to get it sold. So if it's going to come up in due diligence, I better know about it, and I better have a plan for it to get to the closing table. So it's a win-win for these out-of-state investors and clients that are looking to find yield in Kansas City. And I'm really ingrained in the market. So it may not be multifamily. It might be a commercial mixed use. It might be a hybrid short-term rental. It might be a triple net lease property. But I'm a yield chaser. That's what I do.
I know Kansas City is pretty hot right now. Generally speaking, what kind of returns are you guys experiencing out there?
I would say that our typical, I don't like to do an IRR just because people are like, okay, well, I don't really understand what that is. And
sure,
you can sell it for a 4 cap 3 years from now. Good for you. But we're looking for 10% cash on cash return. And we're still finding it. So I find a niche of 10 to 50 units. Here's why. It's too big for the single family guys and the guys who are trying to do conventional mortgage. Too small for the syndicators, because all of the coaches out there and the people that are on the podcast are saying, hey, look, don't buy anything under 60 doors, right? Grant Cardone would tell you, do not touch anything under 60 doors because you can't put an on-site manager on it. Fine. We own 700 doors in Midtown that we have management for. It's an easy one for me to be able to plug my clients in and solve a problem for them, and the yield is still there. So now it is, not like it was 15 months ago or even 2 years ago, but it's still there, and we're still finding it.
That's great.
Yeah.
So, I have 2 questions. The first is, what percentage of your clients are out of state versus in state?
100% out of state.
Interesting.
I've never bought a property for somebody in Kansas City.
Gotcha. Interesting.
It's just, if you're going to work with somebody here in Kansas City, you probably know the listing agents, and you're probably unrepresented. It's a niche for me because out-of-state clients do not have that team. They don't have boots on the ground. They don't know the lenders. They don't know contractors, the appraisers, everything that I do. So if you're here and you're a player or a hitter in the space, you've got your team, and you don't need me to necessarily do it. Now, I partner up with those guys and do syndication deals, absolutely, because they bring me great properties and I solve a problem for them. But for my buyer clients that are coming into Kansas City, 100% of them are out of state. And I'll tell you, they come from 3 different states: California, Florida, and around, well, I'll just call it the Northeast. That's really basically it.
Interesting.
A little bit of Colorado in there.
All right. And walk me through this business model of staying on the buyer side. It's fairly unique, right? Generally speaking, we see multifamily, whether it be small to mid or even large multifamily, where it often trades with just the listing agent representing both sides. And so walk me through how you work exclusively with buyers, make the deal work for you and for the buyer, and still get deal flow.
Well, I would say that I have a close rate about 90%. And so listing agents know that, which is important. That's the first thing. Secondly, I would urge all buyers to think about working alongside a listing agent if it's your first time or if it's even your 5th time, just because a listing agent, what is their motivation? Well, I represent fiduciary responsibility or contractually to the listing or to the seller. You as a buyer, I'm a transaction broker. I have to legally be a transaction broker, meaning I can't give you any feedback or thoughts or anything about this. All I can do is take your paperwork in. Now, well, why would you not want a local resource that is helping you on that side as well, thinking about your best interest and focusing on your goals and not just the seller's goals? Hey, by the way, if you ask a tough question to the listing agent, they're contractually obligated to not necessarily tell you everything, but they have to tell me. There's some ways like that. Some of the listing agents won't work with me on that. That's totally fine. It's typically your capital markets guys who are doing 150 units plus, and that stuff in Kansas City is already trading at a 5 cap anyways. I'm not going to go buy, there's 350 units on the plaza that just traded at like a 4.75 cap rate in Kansas City. Like, it's just silly. But it's institutional quality and things like that. It's not my niche. I don't have any value to those people, and that's okay. So typically the guys that I'm working with, they are looking to co-broker because their deals are a little bit smaller. They might have a little bit of hair on them. They might be in an area that's transitional. And to be honest, to find the seller or the buyers that they need to be able to market it. They're happy and willing to pay. So you just find the right from the get-go. You just find the right mix. And I'll ask the CBREs, you name it, I'll ask them, hey, are you guys willing to work with us on this? And if they're not, or if I hear hesitation, no problem, guys. We'll go find something else. Go sell it to, if you want to represent and take your full 6%, totally get it. Have fun doing your one transaction this year. That's just not what I would try to.
Gotcha. That's a great approach, and I like the mentality behind it for sure. I'm curious about working with out-of-state investors in this 10 to 50 unit space, because you see a lot of outside money coming in, but generally into the syndications because it's totally passive, it's hands-off.
Sure. They
can dump the money in and let an on-the-ground operator handle the deal. You're actually bringing them in. My question is, you mentioned that oftentimes these properties have hair on them, they have some challenges, maybe they're in a transitional location. How do you navigate that process with an out-of-state buyer? Are you the one that's managing the project after the fact? Are you just putting them in touch with the people to do that? How do those investors work with you in that type of scenario?
Yeah, well, it's a great question. And I would say that I always think about real estate from I'm an acronym guy. So IDEAL is my acronym, right? Income, depreciation, equity buildup, appreciation and leverage on your time and on your money. So I ask people, I'm like, hey, well, one, where's your money coming from? Because if it's a 1031, okay, great. Probably we'll have to go find you your own asset to purchase, or maybe I can put together a tenant in common deal for you or find somebody else who's willing to do that. Probably not, but maybe. I've done it before, and we've 1031 multiple of my clients into passive syndications using that TIC model. Talk to you. I'm not a lawyer. Talk to your attorney. So I always try to start where the source of the funds are coming from, and then what is your goal with this investment, right? Stephen Covey said, start with the end in mind. So I always walk people through that acronym, and I say, what's most important to you? How long is this investment? And then the third question always is, how much time do you want to spend on this? Because I've had opportunities where I'll take a out-of-state client and turn it into a joint venture with myself. And if the project's great enough or I like the asset enough, then I'm going to go in full force and be hands-on, boots on the ground. You know, we've got a short-term rental commercial property here, out-of-state California investor. There's a bagel shop on the main level, and it's 2 short-term rentals. To manage that from afar is a little bit of a challenge, right? So I've helped find the manager for the short-term rentals. I managed the commercial tenant, and we split it up in a way that we felt was equitable for both of us. And so there's multiple ways that I'm able to kind of work with people. And then if it's just capital from a stock they're selling, or they're just sitting on an inheritance or something like that, at any given time, I probably have 2 to 3 different equity raises going on that one of them might fit for those types of investments. And so I think the key is to figure out, from my standpoint, is to not push anything on anybody. And the way that I do that is I provide information, and then I always see what comes back. Because a lot of people, I've been in sales for a long time, if you don't hear back from somebody, one, you didn't pique their interest enough, or 2, it wasn't the right fit. So, and then 3, maybe you just didn't follow up enough times. But if you followed up 5 to 7 times, I think it takes 6 to 8 touches to get somebody back talking with you. If you've done that and you haven't heard anything, let it go. It's not the right fit. So I have a process where I can now have a feel for, one, who's really wanting to purchase something, and then 2, what, through my conversations with them and my conversations that they've had with lenders that I've been listening to and other property managers that I've been introducing them to as well, we start to formulate this picture. It's like an artist, right? You have a blank canvas at first, and then you start putting some color onto it. Well, this whole process that I work with people, it takes 2, 3, 4 months sometimes. It's an investment for both of us, but I let people out really early, right? So I get to know, right, really quickly. Chris Voss's book, Never Split the Difference. Get to know really early on in the process. If you're not feeling good about something, if your heart has changed, you're not going to hurt my feelings. I've got enough transactions going on. I've got enough of deal flow that I'm not counting on your deal to make my lights stay on. And that's always a really good position to be in for myself, and people can feel that. And so a lot of times it actually makes them gravitate towards you because they're like, look, dude, you're the expert and this is a really good opportunity. I'm going to trust you. And, oh, by the way, I just talked to 15 of your past clients that you've worked with in the last 6 months, and they're all super happy and they're cash flowing. So it's your reputation precedes you from that standpoint. But I think why more people don't do this business model is, one, talk to another agent who did 125 transactions in not just 12 months, who did that in 12 years. So I have so much exposure to that I can see things that are going to come up. I can see red flags. And then I have a team deeper than deep. That is so important that I want your listeners to hear. If you're working with somebody out of state, make sure, one, that they own real estate themselves, two, that they're doing transactions, and then three, I have a guy for everything. Or a gal. Sorry, let me just say that. I have a guy or a gal. Unfortunately, in the commercial real estate world, as you know, there's a whole lot less gals working. We need to get more females in our industry. My partner and my broker that I work with now is a powerhouse hitter, Audrey Navarro, who is a female, and I love working with females in this space. They just have such a different perspective on things. It's wonderful. But what I would say to out-of-state clients and people that are thinking about investing, find somebody that is on the Bigger Pockets forums, that is hosting meetups, that is you get on their website. They better have a website. See what their recent transactions are. If they're a little hesitant to give you past, people that they've worked with, maybe you shouldn't work with them. All of those things are very important to ask and figure out before you hang your hat with somebody.
Yeah, great tips. Thank you for breaking down your business model a little bit for us and helping people to understand it. I think it's unique. We need to start winding down here. I know that you're busy and I want to respect your time, but I do have one final question, then we'll roll into our sort of rocket fire round here. But I'm curious about, in the future, how your business model might need to change in the event that the market in Kansas City starts to change in that space that you're in. Have you given that some thought? And if you have, what does that look like for you as the market starts to shift and maybe you aren't able to get the same yield that you've been able to enjoy in the past?
Well, my first real estate mentor told me, Logan, if you don't pivot and change in real estate, you will die. And so I am not just a broker. I do not just do transactions. I raise equity. I do my own projects. There's about 4 or 5 different ways that I have revenue coming in from a real estate standpoint, which is really, really important. And when I think about if the market changes, well, I've been seeing a very big change right now from multifamily into long-term national credit tenants that are e-commerce, what I'll call resistant, right? So your hardware stores, your Dollar Generals, your thrift stores, and these things are trading at above an 8 cap right now in good areas in Kansas City. They've got more than one tenant, 3 to 4 tenants, and the transaction might be 50,000 square feet, and it might be an 8 to 10 year lease. Well, I love that model right now because there's a lot of opportunity for people to find yield in that, renegotiate the leases. I can help do that, and then go to market to sell or refinance and do it again. So the thing that I've tried to do is figure out, okay, when the market does change, and Adam Gower is a guy that you should talk with. He runs Gower Crowd, and he's kind of a leading source on information of crowdfunding. So my big shift right now is shifting into crowdfunding, not necessarily for me to buy properties right now. I'm looking 6, 8, 10 months from now. What's the market going to be like? Can't tell what the economic indicators are going to be like, but what I can tell you is that I'm on everybody's list out there that are buying properties in Dallas, Fort Worth, in Kansas City, in Des Moines, Iowa. You name it, they're buying it. Phoenix, Arizona. And these syndicators are calling me, and I'm having conversations with them. I'm like, how long have you been doing this? What's your model? Man, those returns look really good. The exit cap is the same as your buying cap. Well, maybe there's some things that aren't really lining up. So I've evaluated a lot of deals that I feel like people are getting really, really aggressive on their underwriting. And so that means for me, I've been coached to look 6, 8 ahead. And if I can build my investor list to 20,000 people, when these other properties start to see some vacancy and the DSCR is not being covered and there might be some opportunity for Logan's team to go pick them up, I'm going to pounce. So I'm actually waiting for that to happen from an acquisition standpoint. And not only that, my investors and my clients are waiting for that too, because look, these guys that are buying these properties, they might tell you they have a certain amount of money for real estate. When you really get into it, and I've been in meetings with them where their personal finances have been in, they got a whole lot more ready to go. They're just being very conservative, and they've got to that point because they have been conservative, right? So I have a feeling as long as we can get the debt taken care of, which I think there's enough family offices and private debt that even when the economic downturn or recession or correction, whatever you want to call it, happens, I'll have access. I've been building over the last 6 to 7 months these debt relationships that are not agency lenders. They're guys that have money in a bank account that want to lend it. And their terms might not be that great, but when everybody else needs debt to go purchase something and they can't get it, I'll be getting it off of balance sheets, and I've got the equity ready to go to deploy. So I think I've positioned myself in a way that no matter what happens, I have either clients for syndication, I have clients that want to purchase assets themselves, and I'm really trying to figure out and make sure that I'm positioned as the Midwest guy so when that does happen, our clients are going to be coming to buy assets that are at that 10 to 12 cap range again, which would be awesome, which honestly we didn't see. I mean, back in 2014 and 15 in Kansas City, we were at 10, 11, 12. So, I mean, it's not that far off. That was only 4 or 5 years ago. And I have a feeling that some people have been getting a little bit aggressive, and they're putting really leveraged debt on these properties. And if they are in a really good area, what happens in a recession or a correction, I don't know. I read what Hunter Thompson from ASIM Capital puts out. That guy is really smart, and he's looking at all of the different indicators. Well, he had somebody on from CoStar the other day, and he said, look, when those pullbacks happen, people don't care about amenities anymore. Class A goes to Class B. Class B either stays or they go to Class C, and all of our holdings are in that D plus, that will be a C in some time, up to maybe a B minus. So I try to stay insulated, and that's again why I don't play in that capital market space, because the assets that I like to own and purchase is kind of what I coach my clients to do, is that their rents per square foot are not astronomically high. We're at $1.50 a square foot. Well, everybody can afford $1.50 a square foot. I mean, not everybody, but most people can. You got a 700 square foot apartment, that's not that much. That's $1,000 a month. Well, most people can come up with that. But if that same apartment is $2,000 a month, maybe not. So from an asset class standpoint and a strategic standpoint, I've tried to really position myself, no matter what happens to the marketplace, I will still be able to add value to my clients that are out of state.
Well, and it sounds like the key is being willing to adapt and being ready to adapt when the market does shift. So I appreciate you walking us through that. Well, look, we got to wind down. I know you got a jam. I got 3 questions for you before I let you go. You ready?
Let's do it.
Okay. What's the biggest mistake you've made on your apartment investing journey so far?
Grossly underestimating the time that it takes to raise capital.
Give us just a real brief synopsis of what you mean by that.
Even if somebody signs a letter of intent, getting that capital from their bank account to your bank account takes 3 weeks. Just model 3 weeks into there. It takes a long time. We just sent out our subscription agreement and operating agreement for a 40-unit apartment complex that we didn't get to talk about. And I know I'm going to be on the phone for the next 2 weeks going through every single line of that 37-page document.
Yeah, cool. What is the biggest win you've had on your apartment investing journey so far?
Being able to get into a 100-plus unit deal on the GP side with less than 2 years experience and $20,000 and get a very good ownership stake in it.
That's pretty cool. We're going to have you come back on and talk about the 40 unit and that deal.
Yep, we'd love to.
Okay, last thing. What's the best advice you have for someone who's just starting their apartment investing journey?
Educate, educate, educate. Not only that, make sure your self-worth is not tied to outcomes. Okay, what I mean by that is simply this is a roller coaster. Yesterday I was on sky high. Today I'm down low. But if you can figure out how to just stay even keeled through the process, have faith that it's going to work out, and don't tie your self-worth to outcomes, you'll be able to last. It's those that are getting very emotional about things and they feel like whatever their outcomes that they get are tied to their self-worth, those are the ones that are going to fall through.
Awesome, man. Logan, thank you so much for taking some time. Everybody reach out to Logan at livefreeinvestments.com. You can catch him on Instagram as well. He's got a great Instagram account. He's always providing a ton of content. And is there any other way for people to reach out to you? Do you prefer them to go to livefreeinvestments.com?
That's it. Yep. You can find time and schedule with me there.
Awesome, man. Well, hey, I appreciate you coming on. I appreciate you bringing the heat and dropping some good knowledge. And we'll be in touch with you soon.
Looking forward to it. Thanks for having me.
Hey guys, thanks for listening in today. Hope you enjoyed the episode. Please hit that subscribe button or leave us a quick review. Also, don't hesitate to reach out to us on Instagram, Facebook, or at apartmentinvestingjourney.com. See you next week.